Welcome to the weekly update, where I'll go over the action in the market for the week of December 18th through the 22nd, and then we'll see how things look for the week of December 26th through the 29th. This goes without saying, but the market will be closed on Monday for Christmas. We're still looking pretty positive. We've had 8 straight weeks of upward movement in a row now. We've been overextended now 2 weeks ago, 3 weeks ago, right now. But that's what you see in a more positive environment where the market does get overextended to the upside, but it still keeps going anyway. We had a little bit of a scare this past week when we had a decline on Wednesday, but in Thursday and Friday session, this buy the dip mentality kicked into gear where we were able to take care of those losses and ended up having another up week. The week coming up now is probably going to be pretty light. We're in holiday mode. We saw volume below average this past week. Now, between Christmas and New Year's tends to be a pretty slow week. However, that means that prices may chop sideways without a lot of action. But because volume really drops off, if some big player comes in, like a hedge fund or an institution, they can really push prices up or down depending on if they're buying or selling. So we need to be watching for that just in case something like that happens. Before I get started, I just want to send out a heartfelt Merry Christmas to everybody. I hope that this is your best Christmas ever. You have a lot of fun time with family and friends, and that 2024 will end up being your best year ever as well. Also, some things to take care of before I start. I am going to be launching a new version of a video in 2024. These are different in the degree that from what you're watching now. These are more promotional in nature, so the thumbnails might look a little more enticing. They're probably going to be shorter, and it's where I take maybe 1 chart, 2 charts, 3 charts, and just pick out what's happening right now. Because one thing that I do hear back a lot about the videos that I do is that they're very long. And they're designed that way because I want to get people who are looking for quick answers to move on and go somewhere else. But at the same time, I still want to try to promote what I'm doing. And so I want to do this newer format where I just look at something with the idea of then directing folks to the longer version of the videos. And so I may use a little more eye-catchy type things to try to do that. I don't know. I'm not real good in that area, but at least that's the ideas, one of the ideas that I'm kicking around. But still, if you watch the other videos that I do, you might find this informative as well. I do post a PDF in the description below each video that I post either on YouTube or on Rumble. Pivot points are also updated on the community tab on the YouTube channel. I do that every day. I do have a private Facebook group. I do have some back and forth going on from time to time, but if you want to come and interject additional things, you're more than welcome to do that. I've already posted a new poll for the upcoming week, and I'll be going through the results of the latest poll here in just a moment. And then when it comes to YouTube comments, I really keep a close watch on those. And I try to take a little bit of a different approach to YouTube comments. First of all, I want to get rid of all the garbage and crap comments. I don't want that on there. Other channels may like that because they're getting deeper into the YouTube algorithm and they kind of like that. But also, there's a number of comments that people make that I really can't respond to, where you're just making a statement or you're saying something that it's not really within me or my place to either agree or disagree. So I don't do anything. I just kind of let it sit there. Well, as we're coming up to the end of the year, I've got a whole list on my YouTube channel page of comments that I've never responded to. And in some of them, I don't necessarily agree, and some of them I don't necessarily disagree, but I'm probably going to be taking those comments off. I want some good back and forth to go on with the comments. So if you posted those comments and they're suddenly gone, they've been sitting up there for quite a while now, so maybe folks won't notice that. But I just look at these all the time, and I want to clear off that page and kind of start new with that. Also, I do post on Rumble. I've mentioned that a couple of times now. Sometimes I have some uploading problems, and I also have problems sometimes with YouTube. It can depend. something will upload just fine on one platform and I have trouble on the other platform. I always try to post things just as soon as possible. And here is the link, or this is the path to the channel that I do have on Rumble. It's also in the description below this video. All right, let's go back and talk about what happened. So for the week, we were up 0.75%. It wasn't looking that way after Wednesday's session, but we were able to recoup the losses that we saw and ended up finishing higher. But we were below average with volume. We were in pre-holiday mode. Now between Christmas and New Year's, we're going to be in holiday mode and expect volume to remain light. We are positive still, but we're starting to get overextended even on some of our weekly charts. But we're still looking really good as far as the short and intermediate term on the daily charts. We're looking positive on the weekly charts. There's always some things to be concerned about. It's never all green or all red. The market is like that. But for the most part, for right now, we continue to hold up. Inflation and interest rates, we're seeing a real shift now as the market is going from the Fed being more hawkish and raising rates to possibly the Fed stopping raising rates and potentially in 2024, maybe even lowering rates. And that's kind of the shift that we're seeing and why we maintain this overbought condition for such a long time. There'll be Fed speak that comes out from time to time. We had a little bit this past week that kind of counteracted what Chairperson Powell was saying in his press conference. That might have been planned because the market was getting a little too exuberant over all of that. And then earnings as they are released, but it'll probably end up being kind of a slow week. We are now starting to see a strengthening trend. So we're seeing confirmation of that. We have a really strong trend in the short and intermediate term, and we're starting to roll over in the short term on the daily chart, showing that the trend could be starting to weaken. We're extreme positive both in the short and intermediate term. We're seeing the ADX crossing above the moving average on the weekly chart, and that is now going above 20. So we now have more of a confirmed uptrend. So it's positive, and the green line is above the red line. So looking at the different indexes, the Dow ended up being up 0.2% on the week. Not a real gangbuster week, but it was still up. The NASDAQ was up 1.2%. The S&P up 0.8%, and the Russell, and this is part of the January effect. And so far, this seems to be continuing. It looked like it might be falling apart, but for right now, this idea that the small caps are receiving more favor continues to be valid. Now, that could stop at any time, but seasonally, this typically will continue going into the beginning of 2024 at least. So for the week, just some comments that we can make. The market has advanced for 8 straight weeks, and these are more broad-based gains. We're not just seeing the mega caps doing well. In fact, in some ways, they're underperforming. We're seeing a lot of stocks that sat out most of 2023 with solid gains now starting to show some improvement. And there continues to be a drop in interest rates, and the market likes that. Now, at some point, that's going to shift over and become negative. But for right now, it's seen as positive. There's also a pretty optimistic outlook on the economy. The idea that we may have a soft landing where we're seeing economic slowdown without going into a recession. And then you have this thing called FOMO, or the fear of missing out, that folks are like, oh my gosh, I want to have a really good year in 2023. I better get involved. That can be a bit of a warning sign because these are folks that tend to do things according to their emotions or hunches, or they think they have some inside track as to what's happening on the market, where I tend to just look at the charts and have it tell me what's going on. But folks make decisions based on this, and sometimes that can mean that we're kind of getting late in the game here. And there's also an increase in speculative trading without a lot of selling coming in. We're seeing the small caps, yet they pull back, and some days they have really good up days. Other days they pull back for a day or two, and then they are so far resuming their upward trend. We did have some earnings that came out this past week. Micron came out. They had a real strong report, and they had good looking guidance going forward. And so they went up, but FedEx and Nike, they didn't have as good of guidance looking forward when they had their conference call. So both of those stocks ended up getting hit pretty hard. The economic data, as I mentioned, it remains consistent with this idea of having a soft landing for the economy. And there were some geopolitical things that happened this past week. That's in the Red Sea. Of course, that's close to Israel, but it's outside of Israel. And there's some fear that things could escalate beyond just what's happening in Israel. It could turn into more of a regional conflict, and that could really have an impact on gold. It could have an impact on the dollar. It could have an impact on the stock market itself and cause some problems. And then the markets will be closed on Monday for Christmas. And that probably goes without saying, but still, when you're used to doing things according to a schedule, you can kind of get out of that sometimes. We're coming down here into the latter part of the month of December now, where we typically do see a decline in the VIX. But you'll notice also on an average basis, right when we get closer to the end of the year, the VIX tends to spike up. And on some of our seasonality charts, we also show a little bit of weakness right as we get close to the very end of the year. So that's something just to be aware of. We are also keeping an eye on inflation, where we continue to go down, and the market really likes what it sees right now. This is trying to match up what happened from 1966 to 1982 with what was going on up until about the end of June this year. And we're kind of in this declining blue area. We continue to be right there for right now. But be aware of this, because after we saw this from 66 to 82, we saw massive inflation that ended up taking over in the late 80s or late 70s, early 80s, before inflation really started to come down. And I'm only showing this in the weekly chart now. This is the RenMac research, which suggests that whenever we're below 4.02% on the 10-year yield, that tends to help earnings for companies. We closed on Friday at 3.9%, so we're now under that level. Looking at our poll results, the first one here says the markets have interpreted Chair Powell's remarks as dovish, meaning more friendly to the market, with the possibility of seeing rate cuts in 2024. Do you believe that the Fed is actually turning more dovish or will remain more hawkish? We were split 50-50 with this one, whether they're getting more market friendly or will remain less market friendly. Then stocks continue to be overbought, and they're overbought now. They were overbought a week ago. They were overbought 2 weeks ago without any real significant decline. Do you feel that the overbought condition will necessitate a pullback before the end of the year, which hasn't happened yet, become even more overbought by continuing to go up, which is what is happening, or be able to consolidate by moving sideways? There is something to be said for that. We saw this about a year ago, where the market really did consolidate by going sideways for quite a while, and it wore off that extreme condition, and then we saw a real nice start going into 2023. Well, 27% thought at the time they voted that we will have a pullback. We're not getting that yet. Stocks will climb and become even more overbought, 36%. That's really what's happening. And we're not necessarily going sideways. We may go sideways in the upcoming week, but up to this point, we are still climbing. And seasonality seems to be sticking to historical norms, which can be positive for stocks for right now. From now until the end of 2023, do you think this will continue? 64% think that it will continue, and so far it is, where 36% thought that it was going to stop. Then as of a week ago, December 15th, it appears that the January effect may be happening. It still looks like it's happening now, which typically benefits small caps and possibly mid caps. Do you feel this will continue? Everybody thought that it will continue, and that's what has been happening. Looking at a couple of charts here from Isabel Net blog charts, where we're still seeing, looking out into the future, positive earnings when you're looking at forecasts, and that justifies higher prices. Then we also had the leading economic index this past week. It is turning back up if you look way over on the right-hand side, but we're getting a very low reading. Typically, when we drop down below this red area here, that's when we're going to go into a recession, and you can see other times when that happened. We may be able to avoid that right now, and that's what the market is thinking, but we still want to respect this, knowing that usually when we get really low readings like this, we do go into a recession. FactSet just had one blog post where their headline says that for the S&P 500 for the current year, 2023, they are expecting less than 1% growth. And then down on the bottom, it just shows you how growth is being projected for 2023, where it's actually coming down a bit, but it's still positive. Then looking at our charts, here's the intraday chart going back to Monday, where Monday, Tuesday, and Wednesday, we saw a continuation of a pretty solid up move. And then we hit some overhead resistance, and there really wasn't any reason for this. This is when things started to spark up a little bit in the Red Sea. Maybe that had something to do with it, but we just saw a little bit of selling start, and then it led to a lot of selling. And before you know it, we went all the way down to this S3 level. But in Thursday's session, we gapped higher and we're able to go be positive on the day. We also gapped higher on Friday. Now, we didn't close at the high for the session, but we ended up being positive for the day. So when we look at just the 5 trading days for the week, the small caps ended up being up the most, and this is just 5 days. So that's why my numbers may be a little bit different than what I've already said. All of the indexes were positive, so the small caps and mid caps did the best, and that's what we typically see if the January effect is going to continue. But the fact that all indexes were positive is always a good thing. Okay, going back to the beginning of the year, we're almost getting to the end of this year, where we have the NASDAQ 100, the NASDAQ, and the S&P up the most. All of the other indexes are now positive on the year. Looking at the different indexes going back to the all-time high, we're setting new all-time highs with the NASDAQ 100. We're also setting new highs, even though we didn't in Friday's session, but we did this past week with the Dow. We're still a little bit underwater with the S&P 500, and all of the other indexes are still under where they were going back to the all-time high. And this is the all-time high for the S&P. I'm not picking out the all-time highs for each individual index. Looking at different sectors, all of the sectors were up except for utilities. When interest rates go down, utilities tend to go down as well. But we had communication do the best, and that's been one of the stronger areas in 2023. The energy sector, which has been under a lot of weakness, it bounced back a little bit. And everything else, we're seeing more broad participation in the different sectors. So when we look at our relative rotation graph, where energy had been doing quite well, it's now red and going back down into the lagging area. And we're seeing things like tech and the financials, which are starting to bounce back now. These are the stronger areas currently. And we're also seeing some improvement in real estate, because when you see lower interest rates, that helps that sector. Utilities are showing a little bit of an improvement, but they're still really having some difficulties. And there's some other areas in the market that are kind of floundering up and down a bit. So when we look just at the sectors for the 5 trading days of the week, we had communication, materials, energy, healthcare, and real estate up the most. And industrials were also up, where some of the other areas that had been stronger, they actually ended up being down, like discretionary and tech this past week. Going back to the beginning of the year, we have tech, communication, and discretionary doing the best. All of the other sectors are still negative. Going back to the all-time high in the S&P 500, energy, even though it's given up a lot of its gains, it's still in first place, followed by tech, industrials, and all of the other sectors have continued to be negative. Looking at sentiment, we are starting to get extreme here. We bumped above 75 in Friday's session. We're now getting a reading of 77. So when we look at this, we bumped up here before, and then we started to pull back. We're now at the point where we start to use this as a contrarian indicator from a sentiment perspective. Because other times, now we could go up even more from here, but other times when we get above 75, that means that the party's going on a little too radical or a little too wild for right now. And folks are just so sure that the market's going to go up. That's when we want to at least be open to the idea of having the different view that maybe the market is starting to top out. Here are, and this is another confirmation of that, the active asset managers, they're above this 80% level and giving us a very high reading right now. When we get above this red line, that's when we start to think about the idea of using this as a contrarian indicator. And we're getting a reading of 97.32. When we look at the VIX, it's still showing that there's not a lot of fear, even though it ticked up just a little bit on the line chart and the bar chart. We're still getting very low readings overall, just showing that there's real complacency in the market. The Ulster Index continues to drop off. We're pegged at the bottom on the daily chart, where we're declining here with the weekly chart. The right X bear bull ratio is also declining, showing that folks are very bullish on the market right now. When we get down to really low readings like this, sometimes we are at least open to the idea of using this as a contrarian indicator. And we're also getting extreme optimistic views when we look at the American Association of Individual Investors. They're breaking above this upper level here, and sometimes this can be a little too exuberant, and we want to use this as a possible contrarian indicator. But when we look at the other sentiment, we compare cash to the tech sector, this black line continues to go down. That's positive for the tech sector. When we were really declining, as we were for a number of years there, that's as the tech sector kept going up and up and up. Keeping an eye on some different economic gauges here, we do have the latest reading from the GDP now, where we're a bit over 2% with their forecast. But then when you look at the other economists who they like to survey and say, what do you think is going to happen? We're at about 1.75% to the upside to about maybe 0.5% to the downside with the general forecast. And here's what it looks like on a bar chart. We're starting to focus more in on the fourth quarter of 2023. And we're still continuing to go down when we look at risky options versus not as risky options. We would get concerned if this was going up. This is actually going down. When we look at the Chicago National Financial Conditions Index, we're still below the black line. We get concerned when we go above the black line. And the tightening standards for banks, this hasn't been updated since the beginning of November, but it's showing a real decrease in their standards, even though they still are pretty high. And we're still below this red line with the real-time SOM rule recession indicator. This was updated on December 8th, so it's getting a little bit outdated here, as is this other U.S. recession's probabilities that smoothed out. We're getting kind of a high reading, but we only get really nervous if we go up to the red line. The Brave Butters leading index is also declining in its latest reading, but that came out on December 4th. Inflation is really starting to tick down. We had PCE come out in Friday's session, and so that's why we're seeing inflation starting to go down. That was taken as more market friendly. Keeping an eye on the Fed, and I only have for the upcoming meeting that will be on January 31st. As of right now, there's an 85.5% chance that they're going to keep rates exactly where they're at right now. That hasn't changed all that much. There are some charts that we can look at that folks might think there might be some rate cuts, but if that was to happen, they're looking at that possibly happening in March. And then if we get some strong economic reports, then that may solidify that idea. If we get some weak economic reports, if we get strong economic reports, they may have to raise rates at some point. And so the market's just going to go back and forth with this whole debate that continues to go on. Here's the Fed balance sheet, how it has been decreasing since June of 2022. This is looking at a year-over-year basis where it's continuing to drop off. When we look at our advanced decline line on the weekly chart, we are positive based on price and volume. We're also looking really healthy on the daily chart. We're rolling over a bit with our 4-week average of the new highs, new lows. We're continuing to go up with the 10 period, and we are seeing not a real breakout in new highs, but we're not seeing any new lows being generated over the past few weeks. The advanced decline ratio, we're positive and above zero. Accumulation distribution is above the moving average. We're a little bit concerned with this on the daily chart because we're getting kind of far away. The blue line is getting well above the red line, and it acts kind of like the boom indicator that I have, that if we get too far away, it has a tendency to come back. Well, this is kind of far away, but could possibly continue to go up. But this is just something that we're keeping an eye on. Our trend is starting to turn more positive now because the green line's on top. We're above the moving average, and we're starting to cross above 20 with the ADX. And our Arun continues to be positive. We have the green line on top. The red line is declining, so the oscillator is above zero. The mass index is not generating a signal. Looking at the daily chart, we have a big down red bar here. That was Wednesday's action, but then we've been able to come back and show lots of improvement since then. So that's more the buy the dip type of a strategy. But you look on the bottom and we see the volume just continues to get lower and lower each day. We're still above the midpoint with the trend channel going back to 2009, and we're breaking above this resistance area. This is what we hit last summer and then started to go down. We've been able to break above that. So that is positive as well. We're still looking really good on a trend basis. We're well above the 50-period simple moving average, which would equate to a 200-day moving average on a daily chart. And the red line itself continues to go up. Also, when we look at the moving average crossover way of measuring this, we're still looking quite positive here. The McClellan oscillator is above zero and going up, and not extreme, at least yet, but we're starting to get extreme with the summation index based on price and volume, and we're starting to turn down just a little bit based on volume, and we're seeing this on the daily chart as well. The top part of this chart and the bottom part are two completely different indicators, and they're calculated in different ways. Sometimes the volume indicator, when it starts to turn, that gives us a heads up. But there's also times when this indicator starts to come down and it fakes us out. When we look at the Swenlin trading oscillator, we did decline based on price and volume, but we're still above zero. So it's still positive. And we're getting extreme with the bullish percent index. And we're seeing the same thing on the daily chart. This is still looking okay. When it starts to turn and come back down and then cross below 70, that's when it will actually be a sell signal. With the PMO, we are looking positive on a momentum basis. We're going up, and based on price, we're starting to get extreme. We're not necessarily extreme based on volume, but we continue to be positive. And when we look at our PMO studies, we're declining just a little bit with the PMOs that are rising. The buy signals are also declining, but we're still extreme positive with the PMOs above zero. The percent B indicator, we're just barely outside here. And we spent 4 days on the daily chart being above the upper Bollinger Band. That's a very rare event. And we're still a little bit outside of the Bollinger Band here on the weekly chart. This is also something that doesn't happen very often. So this signals that something needs to happen. Either the Bollinger Band needs to go up, or price needs to come down, or a combination of the two. But when we look at momentum on our short-term indicator list here, we are positive. Our intermediate term indicators are positive, and we're turning back more positive with the long-term oscillators. And we're pretty much across the board positive, but looking extreme on the daily charts. The Chaikin money flow is continuing to go up. That's positive. We're looking a little toppy on the daily chart. The Chaikin oscillator starting to get extreme positive. We did get an extreme positive reading on the daily chart, and now we're starting to come back down. The force index is still above zero and green, so that is positive. The money flow indicator is giving us an extreme positive reading. The rate of change, since we had an up week, we were above the midpoint. And going back 50 weeks, you could make a case to say that we're getting a little extreme based on 50 periods, but we've gone well above this before. The RSI based on 14 weeks continues to be positive and not extreme. The weekly special K chart is trying to turn back up, but it's going to take a long time for this to turn back positive, where the daily chart continues to be positive. The Stochk RSI has been overextended to the upside for a few weeks now, and it continues to be so. The Williams percent R is also extreme positive. The ultimate oscillator is extreme positive. The vortex, we're going higher with the green line here. That's positive. And we're also seeing kind of that same thing on the daily chart. The Kopit curve, which just gave us a crossover positive signal recently on the daily charts, it continues to be positive here on the weekly chart. And we're well above all of these other moving averages and longer term moving averages and fib levels. And we're wondering, we're closing in on that all-time high here. Are we going to end up giving that a run for its money at some point? Is it going to be before the end of 2023? Will it go into 2024? Will we even get back to that point? Our different charts, the Heikin Ashi on the weekly chart is still positive. We're positive with the Kagi chart, positive with the Renko chart, and positive with the 3-line break. So all of our different ways of looking at the trend are still positive. We're also positive with the ease of movement. We're above zero and advancing with our 14-week indicator. And we had a new X drawn in here. So that's always a positive thing if you're bullish on the market. And the last signal, both for the daily version of the point and figure chart and the weekly version, was a double top breakout that was generated on November 20th. We are still looking positive with the Elder's Impulse system for the S&P. We're also positive with the parabolic SAR with the dots underneath, both on the daily and weekly charts. The PPO studies, we're looking positive in the long term, intermediate term. We came down just a little bit in the short term, but we're still above zero. And then here's a few charts that I picked out. This is an area of concern, growth in transports. That's what I'm keeping an eye on with the daily charts and talking about in the daily videos. As the S&P has been going up, the growth to value ratio has been going down. It's not necessarily falling apart, but we want to see this really going up, and that's not happening. But when you look at the mid caps, the small caps aren't doing all that well. They're at the bottom end of their sideways range. But the mid caps are starting to break out above this recent range that we've been in. So that's more positive. But when we look at traditional Dow theory, where the Dow set a number of new all-time highs this past week, but the transports, you see how they're lagging behind? The Dow broke out above this previous high, but the transports haven't been able to get back up there. That is a little bit of a concern. We want to see the transports doing well, and they're just not performing all that well at the current time. And utilities tend to move more hand in hand with utilities. They were up, at least in Friday's session. Looking at a seasonal chart going back to 2019, we're in the month of December where we're up 80% of the time, and usually our return is 1.8%. Looking at just a plain vanilla chart of the S&P mid caps and small caps, we're coming back and testing the all-time high, possibly with the S&P. We're not quite there yet with the mid caps. We're showing a lot more of an improvement with the small caps, but we still have a ways to go to get back to the all-time high. But the Dow continues to be in an uptrend. The NASDAQ is in an uptrend. The NASDAQ 100 is in an uptrend. We're still in a downtrend with the mid caps, but we're well above both of these moving averages. Another week or two, and we could see a golden cross. The small caps also are in a downtrend, but have been showing some real improvement. You can see here, is this previous high going to provide some overhead resistance? We've hit this area about 3 times now. The NYSE is turning more positive. We're seeing the blue line going back above the red line, and that is more of a broad-based improvement. All stocks continue to be in an uptrend. The 30 biggest software companies, we're seeing the blue line go back above the red line. So this is turning positive after it had generated a death cross. The FANG index, not in the last few days, but it has been generating some new all-time highs and continues to look positive. ARC is showing some improvement, getting up into the mid-50s now and more in an uptrend on the weekly chart. The bank index is showing some improvement. The MACD continues to be positive, and we're getting extreme positive with the RSI. And when we look at deposits coming into banks or going out of banks, we're still seeing negative flow here. When we look at just a plain vanilla version of Dow theory on a weekly chart, where we are seeing the Dow breaking out, that's not being confirmed by the transports. Now, these don't have to happen at the same time. The folks that are the doom and gloomers that are always bearish on the market, they're like, man, look at this negative divergence, man. Well, it doesn't have to happen exactly on the same day. Just within a reasonable period of time, we want to see these confirm each other, and it hasn't happened yet. Looking at the broad market, the CRB is still in an uptrend, but that's a weakening uptrend, as we could possibly see a death cross here fairly soon. Oil is back up into the mid-70s now at 73.89. Copper is still in a longer-term uptrend. It's really been bouncing around. It's seeing a little bit of an improvement as the economic outlook going forward still is turning back to looking more positive. The dollar continues to be under weakness now, which is also giving support to stocks. Gold is still not really breaking out at this point, but still in a longer-term uptrend. And silver is continuing to be in a downtrend and is a lot more choppy right now. Keeping an eye on the total bond ETF, where we're still in a longer-term downtrend, but showing some improvement as bond prices have been improving. Longer term, the stock to bond ratio on a monthly chart, it's coming down, but showing that stocks are outperforming bonds. We're still worried about this, and I've been talking about this in every daily video, because this is not normal. When you take the 1-month yield and subtract the 3-month yield, you should always get a negative result. And for a couple of weeks now, we've been getting a positive result. And I'm not quite sure what that means. It's an anomaly that usually is short term, but it's now been lasting for quite a while. Here's a look, daily chart of the different yields showing that overall they are coming down. And a weekly chart of the US and UK chart, or US and UK rates, where they've been coming down. Germany's been coming down, and Japan has also been coming down. Some relative studies. First, we look at the intermarket analysis chart where stocks are set to have a pretty good year if we could finish right now. We still have 1 week left to go to see how things are going to end up finishing, but they're doing better than the other markets that we follow, followed by gold, and then the dollar, and then bonds have switched back to going positive, where now energy is negative on the year. When we go back to the all-time high or the beginning of 2022, we still have energy in the lead, followed by the dollar, gold. Stocks have now turned positive, where we're still negative with the price of bonds. When we look at some ratios between the NASDAQ 100 and the S&P, they're both doing really well, but the NASDAQ 100 is doing even better. This is a little bit of a concern too. We've seen this for a couple of weeks now, where the S&P 100 in the short term is underperforming the S&P 500. Now, you could take that as negative because the S&P 100, those are a large part of the mega caps that have really been leading the market higher. But the fact that the S&P is going up, that could be taken as more positive because it means more stocks are participating in the move. Growth of value, this is an area of concern where we're still in a longer term uptrend with growth outperforming, but it has been pulling back for a while now. And gold to S&P shows that we're in a downtrend with gold underperforming the S&P. Gold is also making a comeback. It's been going back up as the dollar's been going down, but it's not really breaking out yet. And bonds continue to underperform stocks on a shorter term look chart. Low volatility stocks, these are stocks that don't do well in a strengthening economy, which is what the market is trying to anticipate. And so we're seeing this ratio really going down. And discretionary continues to outperform staples. We're seeing some improvement in that area. Energy has been really underperforming the tech sector. And then some of our longer term charts, we did get a signal that was generated over a year ago now in October of 2022. That is still on the books, and that is more of the longer term positive backdrop that I referred to. And we also had two ZWAG NYSE breadth thrusts triggered within a year. It's rare to see any of them, let alone two, within such a short period of time. That's also longer term positive. The Zohorchak has not changed, where it had come all the way down to -6. Now it's bounced up to negative or to 0, where it had been negative. So this is showing some improvement, but we're pretty much neutral overall. And then our long-term chart, we're getting a little bit above this with the S&P 500 on a weekly chart going all the way back to the 1987 crash. I know there's a lot of doom and gloomers out there that are just salivating, thinking we're going to hit this and just go down the toilet. Well, right now we're above this longer term trend line, and it has yet to be seen whether that's actually going to happen. Here's a shorter term look at that same chart, just going back to 2018, where we're now above this line. But we've been above it before, only to come back down. So we want to respect that, knowing that just because we're breaking out doesn't mean we're necessarily going to stay here. And the NASDAQ 100 is also trying to creep out above this longer term trend line as well. It did get above it before it fell back. Is it going to be able to stay above it this time? And we look at the NASDAQ 100 to Dow ratio, where it's still giving us a very high reading, but not as high as we've seen in the past. The QQQs, which is the NASDAQ 100 to the small caps, this is going down as the small caps are seeing a little bit of love lately. We're wondering if possibly we have topped out here and could be coming down. This is a very long-term chart. It's also a weekly chart, so we want to keep an eye on this. And then we're showing some improvement with our cumulative new highs and new lows for the NASDAQ. We're barely starting to turn back up, but we have seen that before and then resumed going down. That's because we're seeing a lot of readings right now with the new highs minus the new lows being above 0. And then we're looking at the 3-month yield. We don't know if this is relevant or not. It was relevant back in 2007, where we topped out with the yield and then went into the great financial crisis. We did break above that, and now we're starting to come back down. Is that even going to be anything this time? So what's our outlook then? And this is just for Tuesday's session. That's what I include in this video. We are going to be in holiday mode with volume really dropping off. We will be closed on Monday. We did have Nike came out with their earnings this past week, I mentioned earlier, and that was not well received. We are positive, but overbought when we look at the daily charts. And we're going to get the FHFA Housing Price Index on Tuesday, as well as the S&P Case-Shiller Home Price Index. So this is the week where we get a lot of housing information. And then keeping an eye on all the different geopolitical events, wondering if things are going to escalate or calm down, specifically in Israel. And here's the economic calendar, where we're not going to get any economic reports on Wednesday. We'll get some reports on Thursday. So there's really no major reports coming out. So we kind of take all of these together. Looking at seasonality for just December 26th, we're a positive across the board. Apparently, there's some good Christmas cheer that tends to enter the market on that day. And we're wondering if the January effect, which tends to favor small caps over large caps, if that is going to continue. It's been doing pretty good so far. We just want to know, keep an eye on that, not assuming that it's naturally going to happen, but so far it's been happening. And then looking at the 17th trading day of the month, that's what it'll be on the 26th. We do see some positive seasonality during a pre-election year. And then I'm just going to quickly go through the seasonal charts, and we're looking pretty positive with all these charts, where on Tuesday's session, we tend to be more negative on that day. And then we are positive when we look at the Stock Traders Almanac statistics. This other chart is also positive. This is some research that might give us a little bit of a concern when you're comparing election years with non-election years, where the last few days of the year, sometimes we do see some weakness. But when we look at this chart, we don't see weakness at the end of the year, but we see a little bit of weakness here with the equity clock chart. The NASDAQ is still looking positive going into the end of the year, as is the S&P. And then I showed this a week ago, and we're just wondering how this is going to play out, and this can take some time, where we're seeing kind of a similar pattern between 1982 and 2023. Well, if we do end up following that, then things could get very good going forward from here. So we'll just keep an eye on this. So our scenarios that we're going with for Tuesday's session, we're not going with the down one, even though we are overbought. Unless you are super, super aggressive, there's really no evidence to suggest that we are pulling back at this point. Now, that could always happen, but we're just not seeing it in our charts. If anything, we're going with the up scenario, but also be aware, we are overbought. So upside potential could be limited. We're also still concerned about our trend. We're getting very high readings on our ADX. That usually means that we're topping out as far as the strength of the trend, and we could start to come down. It doesn't mean we're looking at a change in trend. It just could mean that the trend could be starting to weaken. The warning signs, we don't have an awful lot of them right now, but the ones that we do have are kind of big. Growth is not participating in the advance that we've been seeing. The transports are negatively diverging from the Dow. And even though they're showing a lot of improvement, the Russell, the small caps, and the mid caps, they're still in longer term downtrends. And then we have kind of a long list on the positive side. This is in the long term camp here, where we're at the long term trend signals. Those are those longer term weekly charts that I was showing. We don't know if we're at a top or not. Sometimes we broke out above that only to come back down. The cumulative new highs, new lows for the NASDAQ, they are still showing weakness, but might be showing some signs of improvement. And then the 3-month yield, it's above where it was back in 2007. And I should have changed this. It's starting to decline. We don't know if that's going to be relevant or not. And then earnings season can be either positive or negative. The positive signs, and this is the list that's actually a little bit longer. We do have the daily special K chart, which is positive, where I just showed you the weekly chart, which continues to be negative. The 5-period equity put call ratio is going down. That's positive. And the 253 period is also going down, which is positive. The risk on posture is showing some improvement. Our oscillators are still positive, but they're getting really extreme, especially in the short and intermediate term. The parabolic SAR and the vortex chart are positive. The bullish percent index is extreme positive, and that's another warning sign. The Copic curve did change over positive recently. The Zohorchak method has gone from being negative back up to neutral. And mid-cap growth and small-cap growth the small cap growth is not doing all that great, but mid cap growth is showing some improvement and actually breaking above its recent range. The financial sector has been showing some real improvement, and our longer term new high, new low study for the S&P 500 continues to be positive. Then longer term, we've had two ZWAG NYSE breadth thrust buy signals that have been generated over the last year. As I said, these are very rare events, and to see two of them in such a short period of time probably is positive for the market. Seasonally and historically, December tends to be a good month, and we typically see positive seasonality going into the end of the year. So we do have positive seasonality, and we have these setups, the different charts that I've been going through that still remain positive. And I don't show this chart now because we're well above the downtrend channel upper line. We're getting far above that right now. So the conclusion that we've reached based on Friday's action that will apply to Tuesday is that we are positive, but we're overbought both in the short term and the intermediate term. And we're somewhat overbought in the long term, but we continue to be positive as well. Thank you. I really hope you found this helpful. Please feel free to check out the daily video that I've already posted. I hope you have a great Christmas, a great holiday week, and I will talk to you in the next video.